All right, so let's talk a little bit about the market, the way it's setting up right now. Yes, it's pulling back, and yes, things are a little bit less bullish than they were, perhaps just since the election, but we're still right near record highs. Has this been surprising, just how resilient the market has become? Forget about the election. It was like that going into it.
Yeah, you could see the market's pulling back a little bit, taking a breather, but fundamentals are still underneath, very solid. You know, we like the acronym less is more. So you want to look at liquidities holding in there in terms of $7 billion in money markets. And you're also looking at earnings. Earnings are in there. We just saw third quarter earnings grow 5.8% for the S&P. And oh, by the way, 8 out of 11 sectors are now growing, so broadening out. And finally, you have sentiment. So sentiment, the Santa Claus rally we're seeing continue. And there's also a lot of energy around new policy, deregulation. And so you're going to wind in their sail for the next year moving forward. So we can see this rally continue well into the year, but taking a break right now is not uncommon.
What exactly, so as a wealth manager, this is the time of year when people start thinking about taxes, they start thinking about the rebalancing of their portfolios and everything else. What exactly is the biggest concern that you're seeing amongst the clients who are pinging you guys and your staff of advisors about what to do for next year, besides just staying long?
Well, we like to rebalance and we like to sell into the strength. You know, let's look at the Mag 7. So we're trimming that. The rate of change isn't going anywhere, right? They're still growing, but they're not growing as much. And that's what's great is then when you rebalance, you take that allocation and you look at the market broadening out. So there's other areas. So clients will be like, hey, why did you sell our NVIDIA? Well, we're taking your original purchase off the table. So that's all the house's money from here on out. And it's just a smart, prudent way to diversify and look for other opportunities. Now, one could argue that some areas of the market and sectors are overvalued based upon PEs, and there's others that have yet to catch up. So, yeah, there's a lot of opportunities out there.
All right, so you open the door. So I got to ask the question now. What's the rebalance trade then? So you take the winning profits, the house money, where do you put it into right now? What's attractive to you?
Well, there's a lot of sectors that are attractive, especially moving forward. You're going to see financials obviously got a bid this year. You're also going to see healthcare sort of catch up with that trade on the value side. But also consumer discretionary is still doing really well, and there's a lot of names that are still discounted at a value in the consumer discretionary sector.